Thank you, Roni and Kobe, for the invitation to discuss this paper. It's a pleasure to be back in Israel and back at the IDC. While I was watching David's presentation, I noticed that we have a correlated presentation. A number of the slides and pictures from the paper are the same. So as a discussant, maybe I'll take that as a sign that I'm kind of emphasizing the right parts of the paper. But I think that overall, the theme of my discussion is going to be getting more toward asking questions about the external validity of the kind of this particular reform, or kind of asking what can we learn more generally. I mean, one way to think about that is David's first slide was sort of talking about relaxing entry barriers and relaxing credit constraints, and those leading to the introduction of new firms. And really the question is kind of, can we learn, so the implication was that from this reform, we can kind of learn about the kinds of firms that are created by all sorts of different kind of reforms, and that's something where I think that they could do a little bit more work. So let me start by motivating this discussion using this report that came out from the Kaufman Foundation. The Kaufman Foundation is a foundation in the United States that tries to foster entrepreneurship. Every year they put out a study that measures the strength of entrepreneurial activity. So in 2010, they put out a report that looked at new numbers for how much entrepreneurial activity there was in 2009 in the United States. And the press release that they released with this report said, rather than making history for its deep recession and record unemployment, 2009 instead might be remembered as the year of business startups reached their highest level in 14 years, even exceeding the number of startups during the peak 1999-2000 technology boom, right? And so if you're already maybe a little bit puzzled as to why 2009 was really there was such economic growth in the US, you can sort of start to realize more of what's going on by the fact that they said that this was led by people aged 35 to 44, followed only by people 55 to 64, which was the energy for all of this entrepreneurship, and that it increased more among blacks than whites. And of course, what was going on is that unemployment spurs entrepreneurial activity, right? If you're out of work and having trouble finding a new job, as was the case with many people in 2009, you may sort of start your business on your own. And so in a sense, what this paper is doing is examining the role of unemployment insurance in this transition to entrepreneurship among people who are unemployed. Unemployment insurance provides income replacement for people who are laid off but looking for work. The goal of unemployment insurance is to help individuals maintain their living standards when they're unemployed, helping people smooth consumption. And also as an automatic stabilizer for the economy, because people who are unemployed are likely to spend a lot of this money, kind of pump it back into the economy. The labor economics literature, however, has of course studied UI and find a potential limitation of UI as it reduces an incentive to search for work. And there are a number of labor papers in this regard. In a sense, David's paper is also highlighting that it may also, it also decreases the incentive to start a business. And so, looking here, they sort of find there's less business creation when, or their relaxation of unemployment insurance, in a sense, enables more business creation. Now, just to give you a flavor of how the labor literature kind of studies this effect is often looking at, microdata on individuals who are unemployed and when they kind of go back to work. And you basically find, so unemployment insurance in the US expires after 26 weeks. And sometimes it can be longer. I think it's much longer durations in France, is my sense. He's talking about 3 years. But what you can see is basically people end up going back to work right before benefits expire. So if you split it up even, so people whose duration, the unemployment insurance expires at 26 weeks, you're much more likely to kind of find a job. And then there's questions about whether that's purely moral hazard or if it's also could be kind of that your unemployment insurance is helping you find the right job. Other papers find similarly right before, when there's 1 week to go until exhaustion, a lot of people kind of go back to work. So, what this paper does is examine business creation effects of a large-scale unemployment insurance reform in France that allows the unemployed to retain their unemployment insurance benefits if they start a business. So in a sense, what this reform does is convert unemployment insurance into business earnings insurance, right, which is something that does not exist in the US, although some policymakers, particularly during the crisis in 2009, were arguing for it because it would kind of help people more start a business and try to create work for themselves. And I'll come back at the end as sort of thinking about, in this in this policy, what are the sort of economic frictions that are being reduced, or what is the sort of subsidies being provided? But what they do is, they show first, as David showed, the reform appears to have a sizable effect on business creation. So this is the number of new businesses started that receive the subsidy that's only available to unemployed workers. And as you can see, new businesses start soon after the reform's adopted, and there's sort of a period where the reform is being advertised. Maybe people aren't aware of it. And what they find is a 100% increase, at least by this measure, of the number of people who go back to work or who start a business for, coming out of unemployment insurance. So it really is very large. I think that David and his co-authors are more sort of macroeconomic minded than I am, so they kind of are referring to the size of the effects often with respect to the overall economy in France, whereas I'll sort of focus on the effects relative to these people, and for these guys it really is very, very large. So the economic question that they come to ask, in a sense, and this was sort of my reading of the paper, and I think it's grown since the version that I read, but I kind of saw the paper as trying to ask, are these new businesses, this sort of doubling of businesses that's created by these unemployed individuals, do these represent self-employment or entrepreneurship? So what does that really mean? Because these words are synonyms often, the way that they're kind of used. But there's the sense that David used on his last slide as well. Do we think about someone who's kind of self-employed? Is it just kind of creating someone who's just working for himself and instead of looking for a job? Or is somebody really going into kind of creating these kind of large new businesses? Now, given that they're kind of benchmarked for a successful, high-quality business is that you hire one person within 2 years, Mark Zuckerberg may not be kind of the fair characterization, but maybe we kind of think of it as a small business you're kind of running by yourself. I'll refer to as the lemonade stand, versus maybe someone who's going to at least have another employee kind of growing a slightly larger business. And that's kind of the question they're trying to ask is what kinds of businesses are these that are getting created? Now, as David showed you, I thought these graphs sort of nicely summarized what they find, right? That the immediate effect of the reform is to create lemonade stands. So there's no increase in, when these businesses are registered, none of them have employees. All of the increase they find from the reform are these businesses with 0 employees. But then 2 years later, there are still more lemonade stands, is now the red line. There are more lemonade stands than there were before. But if we look on the right-hand side, there's also some of these businesses that have grown into employers, right? And so there is also a sense in which some of these businesses have succeeded. And so what they find is that there's a 25% increase in business creation rates. Again, this is kind of when we're looking overall at the total number of new businesses formed. And again, a lot of what they're interested in is quality, which isn't really defined in the paper per se. But what they find is that these various measures they look at, there's similar or better quality after the reform. So there's no significant change in the failure rate, the hiring rate, the growth rate, or the educational backgrounds of the founders. Now, keep in mind that when they look at it this way, though, they're looking at the overall all firms as they're changing these variables. But really only 20%, if there's a 25% increase in business creation, so the 25 out of the 125 that they're looking at, it's only 20% of firms that are actually changing. So these aren't very high-powered tests, right? It's kind of using this kind of approach. It's difficult to find an effect, although they don't find one. Except, what I'd kind of highlight a little bit more is their measure of ambition, which is basically when you survey people before they start these businesses and ask them, do you plan to hire someone? There's a doubling of the number of people. Among these kind of marginal founders, there's actually a doubling of the number of people that say that they do have plans to grow. And that's kind of interesting. I was just thinking about it as David was presenting his paper. If we kind of thought of this measuring success instead relative to people's plans, then maybe they're not doing as well as, because many of these businesses aren't growing. But we just kind of think about it as they're intending to, is sort of saying, well, does this reform actually bring people in who have an ambition to grow their business, and some of them succeed? Then the reform's certainly successful on that regard. The paper also looks at creative destruction. What they define is basically saying that the marginal firms erode some incumbents' employee growth, with the idea that the finding that before and after the reform, these new firms seem to have a higher value added per worker And again, that's not specifically these firms coming in, but sort of in general, the new firms. I'm going to focus in my discussion a little bit less on this. There's some in some appendix table they provide using a different definition of kind of the treatment variable. These results are a little bit weaker, and I'll just kind of focus on the main quality results of the paper. So basically, their identification strategy, which David also presented, was that they have very high quality data, and they basically have an identification strategy that looks across industries. So they predict stronger effects of the reform in industries where sole proprietorships are more prevalent, and they sort industries and then measure the relative effect. Now, of course, as he mentioned, a limitation of this is that it's hard to separate the unemployment reform and other macro shocks that load onto those variables. So here's the result, and basically this bottom line, the blue dashed line, is their what they call the control group. Is you can think of it as kind of the counterfactual without the reform. So they're sort of saying that if there was no reform, that business creation would have grown kind of that much. When you do that, it looks like all of these are just kind of scaling it up a little bit. If the industries that if this is an industry where it's hard to know how to think of it because it's not an industry where there's no business creation. It's just there's not a business creation among sole proprietorships. But the effect of the reform is basically measured as kind of the difference across this. So you worry about could the macro shocks be affecting different industries differently? One thing that's very helpful, the specification test they do provide, is that the reform isn't significantly related to total industry sales. So the reform isn't actually growing the industries. It's kind of related to the creative destruction result. Even if kind of goes both ways. There are these new firms, but they're not large enough relative to the industry, or but the total industry sales isn't growing. Here, it's helpful from at least it's not that kind of these were industries where maybe there would have been more growth otherwise. I still found this identification assumption something I was struggling with a little bit. So as one test, I went and gathered data in the US, much inferior data. And in the process of trying to find data in the US, it's kind of as like a test. I was saying, well, let's look out of sample and sort of say, was there more business creation in the US among these firms in these kinds of industries? And if there, obviously there was no reform in the US, so you would kind of be very suspicious if you found similar pattern. So one thing that led me to admire their paper even more is that in the US you can't even get data kind of that's like there. Certainly not outside of the government and as a public researcher, but I think in general, the US actually collects very little data on non-employer firms. And so it's neat that they have that. And basically, I think that when you kind of use, I have different specifications here, the dependent variable. I'm going to focus less on the first one where the results are not, they're sort of very large. There's almost too large to kind of be believable. If you kind of look at the percent change in non-employer businesses, these results are much smaller than theirs, and they're not significant. I kind of took this as like it's like perhaps also a very weak test because why would you expect obviously something in the U.S., but it's like at least nice in that regard. What I think would be an alternative specification that would be a bit stronger if they could do it in France would be remember the challenge is that we need a compelling counterfactual for business creation without the reform. And so instead of variation across industries, it'd be nice if it was possible to exploit variation in the founder's employment status. So, look at how much, how many businesses are created by people who are employed and weren't, subject to the subsidy. As an example, so I have a paper currently that kind of does this in a very different setting. Not looking at business creation, but looking at mortgage delinquency and basically finding that when unemployment insurance benefits were more generous in the recent crisis, people in those places, people who were laid off and eligible for the benefits, were less likely to be delinquent on their mortgages. But if you look at among people who were not laid off and you look across the same states where the laws, there's no effect, right? So basically, the idea is if there's some kind of counterfactual where we can kind of look at among people who are employed and not eligible for the subsidy, it'd be nice. So the part to do that, you can't do it in the firm data, but maybe in like a household survey, you can kind of look at it from that perspective. And here, the identification strategy would be what's the probability of starting a business? How does this change when you're unemployed? And how does that change after the reform? So you can kind of have a difference in difference. In that way, it would be a higher powered test for quality because you could kind of focus on specifically, are the businesses by unemployed people have the same quality as the businesses started by people who are employed? And I think it's also interesting because once you're in that framework, if you kind of look at when people are starting their businesses, I started the talk by talking about this kind of, the disincentive created by UI to kind of start a business, but that's actually not the effect they're finding, because they're finding that total business starts are increasing. It's not just that people wait until after their benefits expire and then they start a business. What they actually find is that, and they argue that it's kind of this, the eligibility for benefits that helps you start your business. So I think you'd actually expect to find people starting these businesses maybe early in their unemployment tenures. Maybe they already had these ideas or these aspirations, and losing their job kind of opened this opportunity for them. And that kind of, it's a very interesting take on why it's different. My last point, though, is that I think that the remaining question, and this is sort of what I was talking about external validity, is kind of understanding why don't they start a business without the reform. So the fact that business, business starting is increasing with the reform means it's not just that they're shifting when they start it, but these guys don't start it, they don't start businesses without the reform. And so the paper talks about three possibilities. The first being that the reform provides startup capital for the business. The second being that the reform reduces downside risk, right? And the third being that the reform relaxes credit constraints. And in fact, so the paper I mentioned earlier sort of finds that UI expands in the US, credit supplied to unemployed individuals. Their paper also talks about these loans that unemployed individuals in France. There's like another reform coincident with this where unemployed people starting business can get more credit. So, it's hard to know which of these it could be. It's important because the answer will tell us how to design other programs to stimulate similar business creation. And that's the part that I think, when we're talking about creative destruction and all these kind of broader implications, it's important to kind of understand, what's the reason that these new businesses are kind of coming in. The paper, the version I read, has a short attempt to get at these, but I think that it'd be great if there was more evidence, because basically they find, with kind of incomplete data, they find these businesses maybe don't have more borrowing than the others had, and they look at the industry that they go into to argue that the firm isn't reducing, that it's not about, it's not in riskier or less risky industries. And so then by process of elimination, they say, well, since neither of those work, then it must be that they're providing more startup capital. But I'm not totally sure, because if all it was about the fact that they're losing their UI benefits by starting these businesses, well, then they would just start the businesses after UI expired. Or you could kind of think of it as, these businesses aren't employing anyone, so it's not clear what the benefit is by actually registering the business. And in that sense, even before the reform, you could collect your UI benefits, maybe not register your business, and get income from both sources. So, I'm not sure about the the kind of startup capital side as well. So, to wrap up, I think it's a very interesting topic. It's a very interesting paper. It's really a great setting and a great idea to use UI to better understand these issues. And just as the authors kind of concluded, I think that it's really important to kind of understand this interplay between self-employment and more ambitious entrepreneurship, and to understand labor supply and business creation on that margin. So thank you very much.